Hi, welcome to albertohartley.com. It's a new video post. Well, this is the bragging post. I'm just going to be shamelessly bragging about my prophetic-like predictions based on economic principles. Look at this headline. Look, China's housing prices rise further. A couple weeks ago, I did a blog on the fact that the Chinese market was fake and that they were doing things to try to keep prices down. And my point was that the economics of their policies were going to actually make housing prices go up, which, there you go, look at that right there, it made them go up. So this is kind of an important aspect of real estate. That market's really pure, okay? So as you start to manipulate things, and we're doing it now, okay? If you start manipulating things, that market changes dramatically based on what I call uniform principles across the board. So for example, if you tax it, it has an effect on supply and demand. If you basically lessen housing rules or increase the number of permits, it lowers prices because there's more supply out there. So the real estate market is really powerfully driven by economic supply and demand. So anytime you have governments or countries adjusting the actual price values or anything, you're going to have a huge fluctuation in the market. People are going to react differently. So governments should stay out of that market to the best they can. I don't advocate a free libertarian point of view of the real estate market, because I think you can have a disproportionate concentration of capital, and people who lend money can take advantage of those who are not educated. So that needs to be a highly regulated market. But more importantly, it has to have predictability. So I like the way the United States has been doing it with their soft money policy from the Fed, where they're keeping the interest rate low to try to keep people from borrowing. Now we've come to the end of that road. So much like China's trying to keep prices down, well, the reason their prices keep going up, even though there's a ton of supply out there in the Chinese market, is because they've restricted capital to certain pieces of real estate. So, and they've restricted how many units you can buy. So they've got all these false controls on supply and demand. In the United States, what we've done is created a false market in the amount of supply of money. So what I think you should be looking for as an investor is, over the next 2 to 3 years, as this administration gets to the end of it, you're going to see a high spike in interest rates. So if you've got adjustable rate mortgages on investment property, you should go ahead and get it fixed, even if you got to pay a little bit more in interest rates, but it's going to get fixed. So I think what you're going to see is some real 1 point to 1.5 point increases in interest rates as the market starts to heat up here, because there's been a ton of pent-up cash that's going to flow into the marketplace to try to buy real property. So be careful when the market starts to fluctuate. And once again, look, don't worry about the Chinese real estate market. It's going to bust in such a huge way. That's the lie of the Chinese real estate market, that it actually is vibrant. It is not. It's propped up by their government. And you can see these policies kind of come and go. And so just remember, it's still about supply and demand. So hope you have happy hunting out there in the real estate market. And thanks for visiting albertohartley.com.